Good afternoon, everyone. I hope you're good. It's Monday, it's a new trading week. In this new week, one of the things we need to focus on, don't take too many trades, don't take unplanned trades. Also, don't take trades without looking at my bias, because I'll be posting my bias on YouTube. So you can always check, then you know the projection of the market. So from morning, I haven't taken a trade, though I took trades over the week, actually last week. So let's start with what is happening today. Right now it is right now it is 2:20, 2:21. That is PM. But at 3:30 we have CPI. But the CPI we have is specifically on Canadian dollar. Or you can look at Canadian economy. So let's first look at the previous. Previously, the CPI for a month, it was 0.00%. Analysts, they are all expecting it to rise to 0.7%. Now let me explain why they expect the consumer price index to rise. If this is your first time or to watch this video, I want you to know one thing. Number one, we have a Telegram channel for free. You can just join, watch the content. We normally post their stuffs, buyers. Sometimes I give you signals, you trade for free. So if you want that, you just type in the comment section, interested, then I'll give you the link. Now, getting back to CPI. Why is it that Canada is expecting the price of goods and services to increase? Because that is CPI. The price of food, of grocery, the price of petrol, the price of all the bills. Why do they expect it to rise? It takes us back to the war. The war in Iran, the war in, I can say, Israel, the entire Middle East, which includes Qatar, which includes UAE, it includes Yemen, or the Middle East. What is so important about the Middle East? Because they are the largest producers of petrol. They are the largest producers of oil in the world. If you look at one of the canals, which is called Hormuz, that was locked or blocked by Iran, it controls over 20% of the global trade. So if it is closed, it means it is affecting Canada directly. It means within Canada, I'm not in Canada, I'm in Uganda. But it means within Canada, the prices of goods are increasing. Why? They import petrol as well. They import fuel, they import gas, all these things. And if the price of the price of petrol increases, or the price of oil, let me call it oil, increases, it will affect the entire country. Number one, whatever grocery you have been buying, it is delivered from farms to the supermarket by trucks. What do trucks use? Trucks use petrol or diesel. So if the price of petrol or diesel increases, it means the food you have been buying at a certain price, it is going to increase. It's you that pays for that fuel. It's you that pays for that diesel or petrol on trucks. So it means the goods and services will increase. Water, if your water in your house is pumped by machines, if it is generators, if it is turbines, what gives them the energy? It's petrol or diesel. So it means the tap in your home, it is also going to be affected. The prices are going to increase. So basically, we expect in Canada the prices of goods and services to increase. That's why they are forecasting it to go to 0.7%. That is high, from 0 to 0.7%. But if that data comes out and the actual one is higher than the forecast, Maybe it is 0.8, 9, 1 or something above that, above 0.7%. It means the Canadian dollar is going to go high. It is going to gain strength. Remember, the increase in the prices of goods and services creates inflation. Inflation is whereby people spend more money on goods and services. So if people are spending more money on goods and services, it sends a signal to the central bank to do what? It sends a signal to the central bank to increase the interest rates. If they increase the interest rates, what signal is it sending to investors and all that? It is sending them a signal that Canadian economy is attractive. We can invest our money there. There is a good return on investment. So it means the Canadian dollar is going to receive a lot of external money, even domestic money, giving it the strength it deserves at that time. But if the data comes out lower than the forecast, it means the Canadian dollar will be weak. Meaning the central bank doesn't see inflation, they can cut the interest rates, which makes the Canadian dollar unattractive to external investors, even internal. So if the data comes out higher than forecast, the Canadian dollar is going to buy. If you are trading CAD JPY, it is going to buy. If you are trading CAD CHF, it is going to buy. If it comes out lower, you expect those ones to sell. As simple as that. Lastly, the Canadian on CPI of year after year, if it comes out higher than the expected, what will happen? It means the general trend of the Canadian dollar is going to be buying. Because the CPI for a year sets the trend. After that noise, it sets the trend of the market. Where is the market going to go? So in this case, if it is higher than 2.4%, it means the market is going to buy. If it comes out low, it means after the noise, the market is going to sell. So real traders, profitable traders, even you that I'm talking to right now, focus should always be on CPI for a year, because that is what gives you what you're going to take a trader and milk money from. So if it is higher, the Canadian dollar is going to generate a trend up. If it is lower, the Canadian dollar is going to generate a trade down or sell. So that's what I can say. Of course, I had a trade on CAD JPY. Of course, I exited before the weekend because I knew these days, since we have a war, you don't know what will happen on weekend. You might be in a trade, and then you wake up the coming week. There was a trade. Look at that. Look at that trade. So let's wait and see what will come out. Again, if you want to join the Telegram, get free updates and all that, is one thing to do. Just use comment section. Just type interested. I'll be dropping you a link. Thank you. See you after the CPI data is released.